Hey, Matt, good to be back with you. Craig Parry here, Chairman of Inventa Capital. I'm also the Chairman of Skeena Resources, Vizsla Silver, Vizsla Copper, among others.
Hey, good to see you, Craig. You look disgustingly healthy, tanned, thin. What have you been doing?
Well, it's been a pretty good summer, although, far too much work going on, of course, given where the markets are at and what we're doing on the corporate front. But been a good couple of months.
But it's a good couple of months. Look, I want to tap you up, right? You're, I guess, retail investors, family offices looking at this. Craig's like one of us. He's an investor. He just happens to put a lot more money in it, and there's a lot more moving parts. Right. How are you thinking of the markets at the moment? Because you've got a few companies out there. Everyone's been hurt by market conditions at the moment, and I guess they're all at different phases as well. So you have to look at each one individually, but at the same time, there's a kind of overall thematic, which is, geez, do I just sit back and watch this unravel, or are there things that you can do to kind of positively affect your companies?
Yeah, well, of course, we started this sort of macro downturn and move into a recession back in March, which, meant all hands on deck at each of our companies. You've got to quickly look around at, what your cash balance is, what your burn rate is, what's necessary on your spend and what's unnecessary, and really cull those things very quickly. So there's a heck of a lot of work in each of our companies. Here at Inventa Capital, I think we've got 22 companies in total. About 12 of those are listed today. So there's a heck of a lot of work in really sort of doing a lap of the fences and making sure that there's no holes in there. So we did that, and where necessary, raised some money. Golden Shield was an example of that. We raised a few $1 million, $6 million actually, back there a couple of months ago, just to keep the lights on, make sure we can keep the team on the pitch and keep drilling. I think, at Inventa today, our group companies have about 23 drill rigs turning around the world. So serious amount of spend and serious amount of value add for shareholders. But you have to be careful in times like this. On the macro front, I suppose, a bit disappointing to see these sort of changes, and, we all sort of share the concerns that people have with federal bankers and central bankers around the world, but, they're always behind the eight ball, move a bit too slowly in either direction, and then overreact. And we think that that's the case here. Of course, inflation, 60 to 70% of inflation is the result of energy imports into production, and here we're starting to see oil and gas prices level out. Perhaps could be a bit of a tough market for the next few months, but at some point we'll see things level out, and we'll come roaring out of that into what we think will be a phenomenal bull market. This call it what it is. I think we're in largely a global recession right now. Every single recession that we've ever had globally, you end up in a serious gold and precious metals bull market. So we can see that coming in the not too distant future. And then, of course, that huge macro theme of electrification of the planet, transformative, globally transformative macro theme hasn't gone away. So I think, and of course that's also backed by the fact that we haven't seen enough exploration and development in recent years. So I think we're going to run into what will be the biggest bull market for metals generally over the next couple of years. So this sort of dip in the market for the last 6 months here at Inventa Capital has allowed us to do a bit more than we otherwise might have thought we could get done in terms of getting deals done. Of course, when prices are high, it's harder to get deals done. So we've managed to announce a few really serious deals. Our Archer exploration, we announced the acquisition of Wallbridge's nickel assets out in the eastern part of Canada, the Grassette deposit in Quebec. And, Mike Connett, my managing partner here at Inventa Capital, and I have been trying to figure out a way to get a land position in Sudbury for the last 5 years. Well, in one fell swoop, we've gone from zero to having the third biggest land position in the Sudbury camp. So that was a great deal for our shareholders in Archer Exploration and for Wallbridge's shareholders. We announced this morning, Vizsla Copper, the acquisition of Consolidated Wood Jam. That gives us a massive land position just south of Mount Polly here in BC. gives us 1 million ounces of gold and about 1.7 million pounds of copper in one fell swoop. So we managed to get that done in the cover of tricky markets. So, these markets, it's an ill wind that brings no good, and here we've managed to get some really good deals done under this sort of tricky market conditions. Of course, we've got to fund these companies now, but we don't. We still have great access to capital. We've got great management teams in all of our businesses, so we're in really good shape, even though it's been a relatively tough 6 months.
It definitely has. I think money's tight. I want to talk about a couple of the projects that you've got going on at the moment, because you've had some great successes in the past. In terms, you're signing for your shareholders, for yourselves, etc. ISO is a great example of that. I need to talk about Skeena. You put out a report today. Started to look quite interesting there. Again, so do you have any input there? I know you're a chairman, but what's your actual working relationship there?
Yeah, look, I do work pretty closely with the team, but again, more sort of a mentoring role, I suppose, in a sense. And of course, as you grow a company, I think Skeena, 6 months ago, we had a market cap of about $1 billion. We're probably half that today. But of course, all the governance issues ramp up as you get to that scale and you get more eyeballs on the company. So managing that aspect of it's been important for me. But Walt and the team, particularly, we've had Randy Reichert come on board from B2 Gold. Shane Williams there, extraordinary group of people, and they've done a phenomenal job. As I say, our market cap's about 500 million today. Pleasantly, I see that we're up 10% this morning. So the market is still reacting, or starting to react positively to good news again, which I think is a big sort of indicator as to what's happening and what will happen next. Money's starting to come back in for the right stories. But that project, SK Creek, of course, one of the world's great former producing mines, one of the highest grade mines on the planet, $1.4 billion MPV, all-in sustaining cost less than $700 US, Canadian capex of about 580 million. So very manageable project, and certainly the first 5 years of production there will be tier one, 450,000 ounces of gold production a year for the first 5 years. So that's a phenomenal project and a phenomenal outcome for shareholders, and great to see the market reacting positively to positive news for a change, rather than just, for the last 3 months, I think we've seen any positive news treated as a liquidity event by investors. Now we're starting to see money actually come back into the sector. So that's an important change, I think, over recent months.
Okay. And we can talk about Vizsla Copper and the consolidated Woodjam deal. We can talk about Visa Silver's success of last year, etc. But what I'm trying to get from you is, I'm treating you as a sort of large investor. You're kind of like us. You're still an investor at heart, although you're kind of in these deals, so it's a bit hard to extricate yourself. But I'm just more interested in the view here, because I was speaking to a CEO this morning. Don't think he'll mind me saying, because he said it publicly, a CEO. He's saying, actually, we are dropping tools. We are only going to be doing desktop stuff because no one cares what I say in this market today. So no drilling, no operations. We're just pretty much going to be focused on permitting, and that's where we're going from here. So different companies have different approaches to this. What's your approach? What's your recommendation to the management teams of the companies at Inventa Capital?
Yeah, look, I think for someone like that, that's a wise approach. Permitting's so crucial nowadays. Of course, it always has been, but it's a big job, and if you have that opportunity, you need to focus there. But we're taking the view, Vizsla Silver, we've put out some phenomenal results in recent weeks and months. That discovery of the Kapala vein, 11 metres thick on average. It's now over 1 kilometre of strike, 400 to 500 metres of dip extent so far defined, completely open everywhere we go, and we're getting, 500 grams per tonne silver equivalent over those sorts of widths. That adds value for shareholders no matter what happens, so we're not going to slow up there. I suppose if you look at something like Gold Bull, we had some phenomenal results over the summer there at Gold Bull. But not being rewarded by shareholders, so we've throttled back a little bit there and focusing on studies. So it's a bit of horses for courses in my view. You've got to see where value is being added, and see where shareholders are recognising value, and then react accordingly. But you know, you don't want to be beholden to that sort of approach either. You really got to look forward and think, well, what's coming, what's going to add value here. And in our view, you know, drilling and proving up resources, proving up pounds and ounces everywhere we go will add value, as long as those ounces are of good enough grade. So we keep going. You know, you look at one of our portfolio companies, Surge Copper. We've got a couple of rigs out there now, 12,000 metre drill program on our Berg property. Berg's an extraordinary package of targets there, so we'll keep drilling on those, because we think the chances of discovery and the chances of proving up more pounds of copper and more ounces of gold and more pounds of molybdenum are very, very high. So we keep going and adding value where we can. But you know, we're looking forward a little bit here. I think that as I mentioned earlier, if we don't get a precious metals market out of this recession, it'll be the first one in history where that hasn't happened, in my view. And we're about to go into a serious copper, nickel, pretty much every battery metal bull market over the next few years. So getting ready for that is where we're at. That's what we're focused on, and we'll be keeping on drilling at most of those projects and properties we've got.
Are you kind of moving more towards battery metals as a focus, rather? I know you've got obviously you've got a bit of gold and silver in there, but do you feel that the thesis for battery metals is stronger than perhaps precious metals, irrespective of where you think what history determines the future to look like? Yeah,
very, very good question. Look, of all the things that we drill and explore for, gold's probably the least relevant one in that theme. Silver, of course, very much at the heart of the battery metals theme. Of course, you know, solar panels can't be built without silver, so we see that sitting within that thesis. But certainly for Inventa Capital, you know, focus on battery metals is a major focus. You know, unfortunately, we probably missed the lithium rush, although we're looking at a couple of deals on that front as we speak. But you know, we're very, very bullish, particularly for nickel, and hence the Archer exploration deal, and for copper as well, and hence this Vizsla Copper consolidated wood jam deal to give us a huge amount of copper pounds up here in British Columbia. So that's a focus. Look, we also have our clean energy businesses. We have a hydrogen business called Neo Green Hydrogen, which we're looking to take public in Australia over the coming months. And we've announced our first deal on a Portuguese hydrogen project there. So that's an exciting one. So we're looking more and more all the time further down the road as to where demand's going to be in the next few years. And they're very pleased to report our Veda Carbon, you know, is going great guns. We've announced.
Oh, go on. Do some name dropping here. Tell me about Veda Carbon.
Well, firstly, we've announced Veda Carbon. We announced our first transaction. We sold a number of our voluntary carbon offsets to Shell a few weeks ago. We've got all of the major energy companies, oil and gas companies, coming through the door as we speak to talk to us about that. You know, Shell gave us the example that by 2030, every single voluntary carbon credit available will be needed by just that one company, by Shell themselves. So we can see the price of carbon credits going parabolically over the next few years, and so we want to be there. But we just announced a deal, sorry Matt, to get to your point there, with Sir Lewis Hamilton, where we're sponsoring his clean energy off-road racing team, and you know, very, very rewarding, satisfying to see Lewis Hamilton retweet yesterday that the team's now called X44 Veda Carbon Racing. So that's exciting for all of our shareholders, and getting eyeballs on that story very well.
It's good. Sorry, that's where I wanted to get to. He's my favourite Formula One driver. But on a more serious point, carbon credits, you give the example of that one company saying, well, we'll need, you know, all the carbon credits available now. But there's going to be a massive bandwagon of people and consultants, you know, just with their hands out trying to grab money and create these kind of carbon credit, net zero carbon stories globally. It's going to get messy out there. So how do you stand out?
Yeah, it is too. I mean, we've seen that coming. You know, I think that there are probably four credible organisations around the world that vet, validate carbon offset methodologies. We were very fortunate about 18 months ago to sign an agreement with Clear Blue Markets, based here and in Holland, leaders in the space in terms of identifying, validating and verifying carbon offset projects around the world. And so, that set us in the box there. They also trade in those projects as well. So we've got an agreement whereby anything that they do comes through us first. So we can pick and choose the very best offset projects globally as we go. So we're excited about that one. I think that, as an asset class, if you can call it that, offsets have held in there very well over the past 6 months and during this period, during this sort of bearish market. So I think, and certainly talking to these oil and gas majors, the demand for these credits is about to go through the roof. So we're in really strong shape on that one.
Okay, and look, and so we're sort of bouncing around just fairly helicopter view today, just to talk about the entire portfolio of the Inventa capital companies. But you're also quite diversified when it comes to jurisdiction, right? So not just the commodities themselves, but also the jurisdiction. Are you seeing it get harder more broadly on the ESG, specifically the environmental and the social component? In specific countries, or do you find that it's a fairly homogenous response globally, where it is just tougher for companies and more expensive and more timely to actually get anything over the line when it comes to getting the permitting side of things nailed down?
Well, I can tell you it's not getting any easier anywhere around the world. I think there are certain jurisdictions where we continue to learn as we go, and lots of jurisdictions we won't go to because it's just too hard to get even drilling permits. We looked at a project in northern Peru recently, and the guys that own that haven't been able to get a drill permit in 5 years. So we're starting to really sort of narrow down where we will go. I don't think it's ever going to get any easier. And of course, a group like Inventa Capital, we can set ourselves apart a little bit, I think, from the crowd by having a serious focus on ESG principles that work for everyone. I don't want to get accused of being woke on this, but you really, that social license to operate remains critical in our industry. I think Gina Reinhardt said it best about 10 years ago at Diggers and Dealers. She made the point that, if she was a serious investor, she'd be building high-rises in Sydney, Perth and Melbourne because you need 17 individual permits. When she was building a Hope Downs mine, I think she said that she needed somewhere around 2,783 different individual permits to build that mine. So it's not getting any easier. What that means to me is that a group like us can set ourselves apart by doing things right. And you see what we're doing at Skeena. I think Walt and the team there, our engagement with the Taltan, and giving back the Ice Mountain project to the Taltan First Nation is probably peak First Nations engagement in the mining industry, certainly that I've seen so far. That cost our shareholders $25 million, but it ensured that that area is locked up for the future in a conservation zone. Chad Day, the chief of the Taltan, said that will never be a mine, that'll never be developed. So whilst we took it on the chin, we did the right thing there, and that's cemented our relationship with the Taltan First Nation. So you've got to do these things and take that approach, I think, and really listen and engage strongly with all stakeholders, and it's something that's allowed us to set ourselves apart. And the other side of that coin is that permitting projects such a challenge now, even at the exploration stage, that all roads point to much higher metal prices because we're not going to be developing as many projects as quickly as we have been able to do in the past. So that's not necessarily a bad thing either.
Okay. No, I think it's getting interesting, and some companies are dealing with it better than others, and seeing some horrific stories, but from good companies who perhaps have been restricted from doing what they want to do for the smallest reason, and it's Yeah, I guess it's slightly soul destroying when you're in that position. But hey, let's talk about one thing I did want to talk to you about, which was the Archer deal with Woolbridge, right? Because I managed to catch up with Mars Cord just yesterday, actually, and a couple of weeks ago on this deal, and you're very chief geologist, right? You in all but name. And you're very good at talking about strong fundamentals in terms of the asset, and you're proud of that. You want to do things the right way, and you're looking for good projects. You're not looking to pump up and blow up marginal projects. So and I've known that about you for a couple of years, but with Archer, you've picked up an asset which you've nominally paid best part $54 million for, which was valued at zero on Wallbridge's books. Talk to me about how you came at that deal and how you agreed that deal, because I'm intrigued about how value gets created and then how it gets projected into the market, because that's what people buy into your vision.
Yeah, well, during brighter times, those assets, of course, were in a company called Balmoral, which I think had a market cap of about $150 million. So we've taken the view that, can get back those assets, can get back to that sort of valuation pretty quickly. Again, nickel projects, we're very, very bullish on nickel, and I think, we're going to see a lot higher prices very, very soon once this sort of recessionary pressures off the market. The way we view those assets, though, of course, I mentioned as a sort of consolation prize, as sort of as the steak knives, if you like, in the deal, we get the third biggest land position in Sudbury, and there's some phenomenal drill hits across those properties and some outstanding targets. So we'll be testing those over time. But the immediate focus is on the Grasset asset. I think that Mars and the team there at Wallbridge have done a phenomenal job of unlocking value on the Farallon project, their gold project, Fenelon, sorry, gold project, but really had no focus, and I think people forgot almost about those nickel assets. Christian Cargill-Samard, the CEO of Inventa, who is an advisor to Inventa Capital and part of the team here, alerted us to the opportunity about sort of 7 or 8 months ago. So we picked up the thread there. Dave Cobbold, who's the vice chairman of Macquarie Group, has been part of the team and led the charge there as well. So we've got a great group of guys helping us on that deal and doing a great job. I should give special mention to our VP of Corp Dev here at Inventa, Keith Bodnachuk, who's led all of this as well on our side and done some major deals. So Keith's turning into a Mike Connett style superstar, a new superstar of the resource sector. We love that Grasset asset. I think that will be a mine over time. There's a lot of exploration upside immediately next to it. Of course, that was discovered sort of 7 or 8 years ago, and the entire focus of Balmoral was on that asset and drilling around that asset. But we've got 30 kilometres of now proven and prospective greenstone belt there that's never been explored to any extent at all. So, and the chances of finding another sort of Grasset or the like in there, I think, are very, very high. So, immediate value comes from the pounds of nickel that are in the ground there, both there and in the Sudbury camp. And then huge amounts of exploration upside across all of the properties. So, and then of course, you've got that macro picture, macro theme of nickel being. There's not many new nickel sulfide deposits being discovered out there, if any. So, putting your foot on nickel sulfide is crucial for this next phase in the market, we think.
Okay. Well, no, I'm intrigued to see how that one pans out and how the market reacts to that project as you move things forward. The Grasset asset, facet. Okay. Let's just. I did mention it. I didn't let you talk about it, which was the Vizsla Copper and the consolidated wood jam. Bringing those together. What are you trying to do with the portfolio? Because some companies, they're all at different stages, different value. Gold Bull's early days, and Vizsla's kind of going on to be potentially a very meaningful company indeed. Certainly, maybe not in current market, but in terms of what you're actually doing on the ground and what the value could be, right? How do you make decisions to kind of bring companies together, go after assets? You say you've got 22 companies, right? 12 of which are listed. So there's constant sort of juggling. To what end? What are you trying to be? What is this organization trying to be?
Yeah, good question. I suppose at the moment we're a merchant bank and an incubator, really. Um, we
What does that mean? Explain that to people, because like you kind of got the whole ISO energy thing going, the uranium project and the Athabasca Basin no longer gets a mention. So give me an example of what an investment bank or merchant bank model looks like for people.
Sure. So, well, Archer's a very good example. We pulled together a few disparate things there: the Wallbridge team, the assets, access to our capital, ability to recruit very, very good people. I think, whilst I've been fortunate to be involved in some pretty good discoveries over the years, some of my best discoveries, I think, have been good people like Mike Connett and Keith Bodnachuk and Velko Bricic and Jamie Keach, guys that I think will be leaders of the industry as we go forward. And so being able to put those sorts of people behind these sorts of projects and companies, there's opportunity in that alone. But, my personal mission is to supply as much metal to as well as possible and sustainably as possible to a metal-hungry world. So I look at everything through that lens. We always take the view that we're going to build the mine ourselves, and I think with Vizsla Silver, where I think we're onto one of the world's great silver discoveries, and we're potentially going to be talking over the next couple of years about building the world's biggest silver mine. So we take the view that we're going to build it. The projects have to be right. In that sense, grade and tons have to be good enough. The environment that you build, the jurisdiction has to be right. We love Mexico, by the way. We've found it very, very good to operate down there. So the jurisdiction's got to be right. All of those things have got to come together, and then we can build a fantastic project. And I'd love to see us build, a major mining company one day, but perhaps we'll start a bit smaller than that and build a number of smaller companies that eventually become a mid-tier company over time. So that's that's what it's about for us.
Okay. So a parent loves all their children, but it sounds like you've got a particular soft spot for Vizsla. Who else would you kind of mention there as the sort of the next little darling?
Yeah, look, I think with where we see copper going, Vizsla Copper will be very strong. Gold Bull, great company. We've got great assets there in Nevada. Huge amount of exploration upside. A little bit small at the moment, so we'll continue to grow that. Archer, that's a banner deal, I think, for Inventa Capital. So we like what we've got there. We also have Tin One Resources. Tin One. With our Tassie tin projects down in Australia there. We're very bullish on the tin price, have been for a long time, so that's been a bit of a slow burn for us, so we're excited about that. Skeena, of course, there we've got one of the world's great deposits and projects, so that's a bit of a darling. I've got a personal bent. I think that the sort of, carbon offset, clean energy businesses aren't going away. So Veda Carbon, very excited by what the team's doing there. Jamie and Velko have done a phenomenal job of building that company up very quickly. So very positive view there. But
I think you've named everyone. I think
keep
there's no.
holding this Vizsla copper call up as a subliminal messaging. But that's a phenomenal story. The next couple of years for Vizsla Silver are going to be massive. I'm excited about that one.